let's move on to division of the ledgers. To explain further, ledgers are a term used by accountants and bookkeepers. Within the bookkeeping function, we have 4 distinct ledgers, and these are called the sales ledger, the purchase ledger, the nominal ledger, and the cash book. Now I can hear you asking, what are ledgers? Well, ledgers are a term used to indicate books. Ledgers are books. Books in which financial in electronic format within accounting software packages like Sage Line 50. They can also be set up in Excel, for example, spreadsheet packages like Excel. And here we have an example of a simple sales ledger on Excel. Now, a sales ledger is actually an ancillary ledger, so that means it's an outside ledger, an extra ledger to the main ledger, which is the nominal ledger. And it's used to record sales and keeps track of the amount of money received for sales and the amount of money owed by customers. Now, sales must be recorded in date sequence, and here you'll see we have the date that sales were made. Column B, we have the invoice numbers, must be unique. You cannot produce the same invoice number for 2 different invoices, for example. The information usually recorded for each transaction on a sales ledger will be the date of the sale, the invoice number, the customer name, the net cost, that's the cost without VAT, any additional VAT, any additional postage costs, and finally the total cost. Okay, on this Excel spreadsheet we've also added in notes, the time that they've actually taken to pay in days. Okay, and notes sort of things like, you know, is the customer checking their credit terms? Should we start sending out chasing a little bit earlier than usual? Or do they pay early, and should we consider extending their credit terms? Okay, now here we have an example of what the sales ledger looks like within an accountancy software called Sage Line 50. Now here you'll see we have the customers all listed, the customer accounts, the customer name, and the balance outstanding on those accounts with contact information. Now if we opened up one of these accounts to have a look at the activity that's occurring within those customer accounts, we would see something that looks like this. So here you can see the action, which is a sales invoice, the date of that transaction, and here under reference, this is where the actual sales invoice number is recorded. Okay, we then have the total amount. You can't actually see the breakdown here between the net and the VAT, but we have the total outstanding, and down here you can see the nominal code to which the transaction has been recorded. Now this nominal code relates to the nominal ledger that we'll be talking about later, and here we have some details as to what the actual transaction related to. Now the nominal ledger, or general ledger as it is also known, unlike the purchase and sales ledgers, is not an ancillary ledger. It's a primary ledger, so it's the main ledger that is used to record transactions. This lists all of the financial transactions of the business that will eventually be used to complete the financial statements. So it's not just sales, it's not just purchases, it's everything. So the nominal ledger contains items that will be used to make up the income statement and the balance sheet. It's a complete list of all the nominal ledger accounts, so all accounts that are required to make up the income statement or profit and loss and the balance sheet. Some examples of the type of accounts that would be held within the nominal ledger would include, but not be limited to, sales, inventory, salaries, rent, professional fees, plant and machinery. Okay, now here we have an example of the nominal ledger within Sage. Okay, now again, you can see here that we have sales, purchases, other direct expense. Now this is basically showing the account, the name of the account, and then the total sales that were made in each month during January, February and March. Here with professional fees we have the total cost. Okay, so the cash book again is an ancillary ledger and records cash coming into the business and cash going out. So effectively it records receipts from sales or other income and payments for expenses. With regard to a cash book, we need to show the opening balance that we started off with and the closing balance. So basically you can see here we have sales and we've listed the total amount of cash that's come in for sales in January, February and March. We have the total actual money received, actual cash received during those 3 months. Okay, we'd normally do it for 12 months or possibly a projection for 5 years, but I've just done a short, simple example here. Okay, here we've got expenses and professional fees, so this is money going out, payments that have been made, hence the figures rise. A ledger is an accounting term for a book. Financial transactions are recorded in ledgers. The main ledgers we use in bookkeeping are the sales ledger, the purchase ledger, the nominal ledger and the cash book. Test your knowledge by clicking the link below